And when we're looking at the markets in terms of high entropy, the idea is that when we reach a high entropy area, there's got to be some sort of signal to buy into or sell into a high entropy. What is a high entropy area? A high entropy area is where the market energy dries up. The market energy might dry up because the profit takers are coming in. The high energy might appear because people are taking a reversal trade. Whatever it is, if we can take advantage of that high entropy, we can make money. So what we've got to try and do is we've got to try and find those high entropy trade areas and then deal at the exterior of those areas, predominantly for reversal trades. And this is where we start to look at this idea. So when we look at this as a storyline, you'll see this as a storyline here. You can see that we go into a high entropy area. The high entropy area is defined by the black line going through the blue line. High entropy started here. High entropy started there. High entropy started there. High entropy started there. And high entropy started there. Okay? So now we've got all the high entropy areas. Is there anybody in any doubt about any of those levels? It's got to be through the blue. We had a look at this blue line because there was a few disputes. It was Reeve was disputing that it went through the blue line. We zoomed into 500 times the screen size. And for all those skeptics, and I know there's about 90% of your skeptics, take a look. You can tell me if the black line is below the blue line. Yeah, it's definitely below the blue line. That's that Reeve all over again, isn't it? Absolutely. So the black line is below the blue line. It is a trigger. It is a trigger. So if this is the triggering, so in other words, in these areas, what are we telling you is likely to happen in these areas? What are we actually telling you is likely to happen? What we're telling you is likely to happen is that we're moving into a low entropy area here. In other words, the energy of the previous move should slow down. In a lot of cases, it might reverse. The entropy in this area here, the price should slow down. In a lot of cases, it might reverse. The entropy into this area should slow down, it might reverse. It should slow down here, it might reverse. It should slow down here, it might reverse. Was it right 100% of the time? It was, wasn't it? It was correct 100% of the time. So it slowed down here and reversed, 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 and it slowed down here and reversed. So one of the things that we're looking at is to try and then get a trigger in those areas. And obviously in terms of getting that automation process, we're obviously looking for up candles for a sell and down candles for a buy. You know, and looking at something as simple as that, you can obviously see if we just pop a little number on our charts here, that in this area, in these areas, all we're looking for is that orange line to drop when that's below the bottom line. So we can see it drops below the bottom line here, and it drops on the orange line. That is a buy trigger. So we're going to be looking to buy into that trade right there. There's our buy trade there. And you can see that on this candle, we also get a buy trade as well. So there's two buy triggers there, and that obviously gives us a very, very nice buy response. Into the top edge here, you can see it's dropping when we go into that area. So we're waiting for it to turn back up. It turns back up there. We now have our sell trade. And that's our sell trade there. So we've now got that short sell on the books, and it's now bubbling away. It happens on the second candle as well beside it. There's our short trade. Now, it doesn't make a lot of money, but it still makes money. On the third trade, nothing, nothing. And there's our trade there. There's the orange line going back up. There's our trade there. This should now be the extreme of that entropy area. The extreme of the entropy area is the sell trade. That's what we're looking to now do there. There's the extreme of the entropy area. There's the sell trade. Into the bottom edge here, you can see that we've got that already dropping. As soon as we get into that area, it's an immediate buy trade. Straight away, we're straight into a buy trade. And as we go back above here, we can see that we move into that entropy area. And again, this is the one that goes up a little bit. It doesn't go up by much, but it goes up a little bit. And it gives us 3 sharp, clean entries in and around that area. This one drops back below, so obviously at that stage there, we're in a little bit of a more risky situation. But you can see here, 3 clean, sharp sells. It's well within my agreed stop, and 3 sells there and a very, very big sell response. I don't think there's very many things that in the marketplace that could match that performance. We bottom ticked the S&P here. We top ticked the S&P there. We top ticked the S&P there. We bottom ticked the S&P there. And we top ticked the S&P there, albeit through several entries. There is no other indicator in the markets that's as good as that. With these clean, sharp trigger processes, you know exactly what price it is. You know exactly how to trade into those areas. You've got opportunities if you want to deal post those areas. But the idea of recognizing entropy, the slowdown process, is very, very, very powerful. The slowdown process allows us to start recognizing that the slowdown process is now upon us, that the high entropy is starting to appear in the markets. High entropy brings opportunities. And obviously, in line with that opportunity, we can then add, for example, other things, can't we? In line with that type of opportunity, I can now look at this from the point of view of, for example, my NASDAQ S&P and start stacking those trades in line with that as a narrative. So, for example, into the bottom edge here, you can see into the top edge, that sell was very good. There's a bit of value divergence here. Sell side top edge, entropy, boom. This buy trade, that looks unbelievably good. Very, very nice value narrative there. There's my liquidity into the bottom edge just there. And there's my buy trade opportunity right there. Boom, money's made. Into the top edge at the cash open. It's a bit dangerous because we haven't seen any liquidity turning just yet. So that might have been one you'd be able to sit on the sidelines and just watch for the time being. You don't want to miss it though. So obviously when it starts pulling away like a train here, you want to be getting involved in that almost immediately. But obviously if we had a value narrative, we now have this ability to overview exactly what's going on in those trade areas. And that gives us this ability to then pop that sell into that market, which then rips $1,000 profit out of that sell trade. $1,000 profit out of that sale. It's a crazy good bit of business. So when we kind of recognize some of these clues, you can start recognizing the power of simply just checking your studies, your understanding of what you're looking for, recognizing that entropy is a real thing. Aggregation, as prices aggregate into key levels, you see that these things happen on a regular cyclic basis. There's a high price, there's a low price, and there's a measured move price. So we know this is going to cycle around this area for at least a while. It has to, because everybody that's short is going to be watching to see if there's going to be a bit of profit taking. The market maker who is maybe net long, well, we know the market maker wasn't, because the market maker's been short all day on the NASDAQ especially. So we know that that's a thing. But on that basis, we know that they really, really need to book some of that money. And that's what causes this high entropy. High entropy, chaos. Chaos means making lower lows and then higher highs. Look at what happened here. The price made a lower low there against a pin, and then the price made a higher high there against a pin, and nobody knows what the hell is going on. What the hell am I supposed to do here? I don't know. So you obviously have to try hard to make any money in this phase. Chaos descends upon the marketplace. The market makers are smiling. And what we can do is we can start looking towards our other proxies. And the other proxies we talked about yesterday, for example, was our market making proxy. What was our market making proxy? The 1 to 5 limit order book. Did everybody set up their limit order book for 1 to 5 or 0 to 5? We covered this in yesterday's classroom. This isn't my working, by the way, guys. This is the most recent PhD studies that I've read on the subject. They've looked at the highest correlation of HFT activity against book liquidity, and it's 1 to 5 depth levels. 1 to 5 depth levels. 1 to 5 depth levels is what I have on the Sierra charts right here. So when you see 1 to 5 depth levels on gold, did the market makers get that sell right? Yes, they did. Is it worthwhile drawing in that level to get that short sell into that trade there? Sure. Absolutely crystal clear. So when it lines up with value, when it lines up with liquidity, you're ready to do some business, right? You're ready to do business. They don't often get it wrong, guys. They really don't often get it wrong on the bigger narratives. And obviously this NASDAQ today has been crazy, 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 because look at this NASDAQ, guys. They've never once went bid for the entire day. Not once did they go bid. They just sold everything here, and they've been selling it ever since then, and they've just been sell side only. Even in the short term here, you can see that liquidity there, sell side only. Now, it doesn't look as if they're as bearish, but they're certainly not buying the bottom edges, are they? They're certainly not buying the bottom edges. When you see this, you've got to make money. You have to make money. It's a crazy piece of information available for you into the workings of the informed traders, one of the most significant informed traders you will ever find. Take a look at the oil and tell me that that's not crazy for informed trading. Is that not crazy for informed trading? Look at it. It'd be impossible not to make money on oil. Look, liquidity sweep, buy side. Liquidity sweep, buy side. You see it? You see how crystal clear that is on liquidity sweeps? Liquidity sweep, buy side, oil inventories. Crazy. Liquidity sweep, sell side, oil, sell side, liquidity sweeps. Impossible not to make money just by getting those extra liquidity questions. It would have been impossible not to make money on oil today using our proxy for the inside informed traders. And these are the market makers. This isn't informed traders like Warren Buffett. This isn't informed traders like PIMCO buying bonds or anything like that. This is the market makers. These are the guys that trade every day at every single price. Every single price. Not just bottom edges and top edges, every single price. So when you see their algorithms diverging into liquidity, it's a real thing in real time with no lag. Imagine we advertised this as a product. Everybody would say, "Why God, just buy it, just charge me $5,000 for this. It's free on your bloody machines." There's nothing that anybody will sell you that's much better than that, I'm telling you. Do you agree? If I came to the room and I gave you that yellow line and I said it was an algorithm, and I said to you, how much would you pay for this algorithm? You'd be clamoring over yourself to buy this thing. You'd be saying, "My God, I need this algorithm. Look at it. It's brilliant." Because it is an algorithm. This is an algorithm. 85% of that line is algorithmic buying and selling by the book market makers. 85% of that yellow line is algorithmic trading. So this is the manipulation of that algorithmic trading here. That's manipulation. That's the manipulation. The further that line can get away from the delta, the more the dealers make, right? Do you agree with that? The further the yellow line gets away from the blue line, the more the dealers make. Because if the yellow line's going up and the blue line's going down, there's sellers selling into the book buying. Sellers selling into the book buying. Sellers here selling into the book buying. And now the buyers are buying into the book selling. The buyers are buying into the book selling. That's how you make the money as a market maker. Don't believe me? Just reconnect with that NASDAQ chart for a second, guys. Reconnect with that. Come on. What? Seriously? Sell side, sell side, sell side, sell side, sell side. %85 of this, 80% to 85% of this line is algorithmic trading by the most informed source of trading you will have on a daily basis. Not the most informed trading source, not the most informed trading source, because the most informed trading source, of course, is the commercials. But the commercials don't deal every day. If you're a big commercial oil trader, you don't go into the market and buy oil every single day in existence. You buy oil when you need to buy oil. You sell oil when you need to sell oil, right? It's not every candle on every single day. You might buy once or twice in a day maximum, but you don't buy every candle. You buy areas. This line here trades every single candle on every single time frame, every single price slice. This line trades it. This line is every single price slice. So when this line's getting mauled, like this here, and this buyer's in here, I need to be short into that. I need to be finding a way into that selling. This is better than anybody else's algorithm, this line. This is the algorithmic line of the markets, guys. Make no mistake about it. This is the real algorithmic line of the marketplace. This is real-time algorithms. And it's some of the most extensively profitable algorithms. You're talking about JP Morgan's algorithms here. You're talking about the 2 Sigma guys' algorithms contained inside of this line. And this is being printed in real time so that you can see what they're doing in real time at all stages. It's an incredibly powerful algorithm if you decide to use it. It is better than any other algorithm in the universe if you can follow it and process exactly what it tells you in line with your order flow. This is real time. It contains all the most recent information. It is the most informed source on any candle, on any time frame, on any price. Hopefully I've emphasized it enough. Pay attention to it. In other words, take a little break. I want to talk